and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me today is Vinny Motiwala. And viewers, this is the show where you get all your stock-related queries answered by our experts. So do get ready to that. We'll be live on Twitter as well as YouTube. And you can also connect with us on our WhatsApp number that will be flashing right on your screen. But before we come to that, let's have a look at what the markets are up to. So Vinny, quite a volatile day coming in, but at least once again for today, Nifty is not seen to be holding grounds of 70,400, and we have broken that mark as well.
Absolutely, actually it's more of a listless day that, boring days have been continuing, nothing exciting coming in the markets. That red still continues a bit on the screen as well. Nifty, like you mentioned, is below the 17,400 mark, down almost 0.13%, like you can see. So keep an eye out on that. But Sensex too not doing anything much in trade. 59,200 levels is what the Sensex is holding on to around. But today what is different for the broader markets is that actually the mid cap and the small cap space is at least trading a bit in the green. When you look at it, the Nifty mid cap is trading with gains of 0.3%, so performing better than the benchmark indices, while the small cap base is also holding on to gains of around 0.1% in trade. But when you look at in terms of the stocks that have been marred in trade, that is Hindalco, Cipla, Coal India are down and out in trade, while Adani Ports, Adani Enterprises and M&M and Bajaj Auto are among the top gainers in trade as well. Let's look at the sectoral performances also, what is doing well and what is not. Nifty Metal is among the top losers on the sector basis, while we have down almost 1.23%, while Nifty Media, Nifty Auto is something that is holding on to the gains. Nifty FMCG index, that is a bit down in trade as well, down almost almost 0.4% in trade, like we're seeing. Now, what is interesting and what we're going to be actually talking about on the BNSN lens is going to be the FMCG pack, the FMCG companies. And when you look at it, the Nifty FMCG index actually in the last 6 months, last 1 month, have actually managed to outperform the Nifty index. So yes, the performance has been better on that front as well. Now, what FMCG companies have actually done during this last month is they've taken some bit of a price hikes, price cuts, some changes coming in there because raw material prices have been changing as well. When you look at it in terms of the barley prices, they have remained benign, but wheat prices have seen a correction coming in, palm oil prices have seen a correction coming in as well. And like you can see, the price hikes that we've taken, some price hikes in soaps, shampoos, not across the board. There are only few products that companies have taken price hikes in, like Godrej Synthol, 5% price hike, toothpaste, some bit of a price hike, as shampoos also some bit of a price hike. Marico has actually taken a price cut coming in because edible oil prices have seen a fall coming in as well. While on the coffee front, a bit of an increase coming in from HUL, Brew Instant coffee prices have seen an increase coming in there as well. So yes, difference coming in on a lot of different FMCG companies because raw material prices are moving differently. Milk prices have seen an increase coming in, so that is a negative coming in for some of these FMCG companies. But how does it shape up? Let's bring on board our guests for today. We have Kunal, Bothra as well as Sharmila Joshi joining in with us to talk to us about what they are liking in the FMCG pact as well. And good morning to both of you all as well. Sharmila, I'm going to come to you. When you look at in terms of numbers also, for Q3, not an exciting set, but not a bad set of numbers coming in from FMCG company. The index has actually outperformed the Nifty, and in terms of slight bit of a price hike that is remaining, the companies have taken this time around. So how are you looking at the FMCG space now? What are you liking in this FMCG pack now?
As you said, a lot has, in terms of the kind of price cuts they've taken, etc. A lot of things have changed for FMCG. And I think, again, if you look at the past year and a half, the kind of cues that we've been hearing, the kind of commentary that has been coming from FMCGs has also been sort of mixed. On the one hand, at one stage, they were positive on the kind of rural demand that they were seeing, but very concerned about the kind of inflation that they were seeing. And that inflation was really more of a global concern than really India specific. And then now we've come to a stage where economies have opened up, but rural piece is not doing so well as you've seen, like a change in edible oil prices. And so it's a very mixed picture is what I'm trying to say, because I think that while on the one hand, there are certain pockets that seem to be doing reasonably well, and, I think even FMCG companies have done everything to really deal with their problems. They've sort of shrunk their packet sizes, but tried to keep prices the same. Now they're at a stage where they're doing some kind of a pass on. So it's very difficult to really give a very one straight line sort of answer to this, and I think you need to be sort of stock specific. So having said that, I do like a whole host of stocks in the FMCG space, and I do think that we are going to see some kind of a rural recovery on the cards in the second half of this year. So having said that, probably stick to stocks like a Dabur or a Godrej Consumer or an HUL from the largest space. Even coffee stocks, I do like a CCL Products, for instance, in that space. Even Tata Consumer with its play on Starbucks, etc. So there are a whole host of stocks that I do like within the space, but I think it's a very sort of a slightly mixed picture going into going forward for the next 6 to 8 months.
Okay, so a lot of factors at play when it comes to the whole of the FMCG basket, but some of the stocks that Sharmila highlighted is our Dabur as well as HUL CCL products are in her list as well. But Kunal, coming to you, we discussed upon a lot of fundamental factors at play, but when it comes to the technical front, in the past 6 months, mostly all of these stocks have been range bound barring Britannia. Any of these counters from the FMCG space you like at this point in time?
In fact, most of these FMCG stocks, Srishti, I believe are going through a patch of correction slash consolidation. Now, the only strong outperformers, yes, other than Britannia, has been ITC, which has also done exceptionally well for itself from the previous year lows of 200 to 20 odd mark to at a point where the stock was just about on the verge of breaking past about the 400 levels last week or so. But then the chart patterns for ITC as well is going into a patch of or indicating a patch of consolidation or correction to come in. The stock is showing signs of classic RSI divergence on the weekly time frame, and this has happened at a point where there is a lot of bullish expectations which are starting to get priced in for ITC. So I think again it gels with the entire thesis that the FMCG pack is going through a phase of consolidation. I think ITC should also probably get into a slight corrective phase from here on. So my belief is that from here on it makes a lot of sense to be very selective in the entire FMCG pack, maybe buying at a 5% to 10% on an average correction for these classic large cap names could be a better strategy rather than buying them on breakouts on the upside.
Okay, so that's the technical view coming in, an interesting take coming in from Kunal, where he feels that ITC could have some correction going ahead. So do be stock specific. That's the recommendation coming in from both our experts. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, we'll be taking all your stock related queries.
Welcome back, and you're watching Buy Now Sell Now on ET. Now, before we get started with all your stock related queries, Sharmila, I'm going to come to you. You know, the markets have been so listless, nothing exciting, and if the side that it picks is always the red, what should an investor be doing? How should one be actually protecting themselves from such a move?
So I think it goes without saying that you need to be a little cautious at this stage because, precisely as you said, over the last 1.5 months or so, maybe since December, so almost like 3 months now, what we're really seeing is a market that's sort of grinding down. So it's not going down terribly in one day, but overall there are brief recoveries, but the overall trajectory has been downward. And again, I think, as you're saying, it's a little listless. And it's really, for people like you and me who have to watch it all day, it's getting a little tiresome. But that is the reality of the markets. Probably in a year, you would have maybe 2 or 3 good months, but the rest of the time, you're just sort of seeing how the momentum is and seeing how markets are really going to be behaving. So I think the advice is obviously to invest, but to definitely have a longer term frame in your mind. And definitely, I think, try to stagger your investment because it simply doesn't make sense to put in your entire amount in one go. Because, as I said, we are seeing markets sort of grinding lower and sectors seem to be taking turns, etc. So I think it just be a little cautious and try and buy stocks when you see an opportunity if they're correcting out of sort of out of hand for any reason and the other fundamentals look good to you, or even if you do like a stock, try and buy it on an incremental.
Okay, that's the word coming in from Sharmila. But let's get started with all your stock related queries. You can send us your queries either on WhatsApp, our YouTube page, or even our Twitter page. So do send us your queries. And let me get started with the queries. And Kunal, the first query is for you, and this one is from Jitendra Patel, and this one is on L&T Finance. buy at, they bought it at 130. What is the short-term target for this?
130 is a steep price, and I would probably sense that you've bought this stock many years ago, because I think 100 plus was or 130 was when the stock was, I think, 2018-19 level. So I'm not sure whether you've bought it on the way down or on the way up for NT Finance, but I think it's a stock which you should hold on to even as of now. I think this is a phase of consolidation for L&T Finance. The stock has picked up quite well from the 2022 lows, when the stock was almost at 60-65 levels, to at one point till last month or so, where the stock was getting up for a breakout of 100 marks. So it's taken a pause right now, but I believe that it's a good time where you should look to at least average out and try and lower your cost price, because I believe sooner than later the stock should get into a breakout mode. So I would recommend a buy as well as possibly an average.
Okay, moving on to the next question, and Sharmila, coming to you for the next one. Satya is asking for a strategy in Vedanta. He is already having some shares at a price of 305. Today the stock is seen to be tanking lower, down about 8%. We'll get the research for all our viewers what's exactly happening with Vedanta. But Sharmila, for now, what's your take on this particular counter?
I honestly don't like the stock much, but I think what you really need to keep in mind as a retail investor probably is, meaning I don't have a strategy so to speak, but I think what has worked for investors is that this has been a very high dividend paying sort of stock. Of course, I think there are a lot of near-term concerns, and they have to do with Hindustan Zinc and the kind of funding they were trying to do, etc. And I think this is also partly some sort of collateral damage, because people are really looking through the microscope at all stocks where the funding requirements are high, and how that funding is going to get done, etc. Post what has happened in the Adani group. So everything is being put through a sort of prism by the market, and probably you would see corrections like this on stocks where you hear this kind of news. I would have really stayed away from the stock ideally, but if you have the stock and if you're long term, then perhaps you could continue to hold because they, in the last 3 or 4 years, they have really rewarded investors with very good dividends.
The next query, Kunal, is from Dhananjay. This one is on Chambal Fertilizers. They want a technical view on this. They were holding 100 shares, making a loss of around 7% as of now.
Well, I would recommend to exit the stock. It's been showing negative patterns consistently over the last 6-7 months. And I think the concern for the stock is that even at current levels, the stock is on the verge of breaking down a major support, which could probably trigger a bearish pennant formation for Chambal Fertilizers. So we could be at a cusp of a major correction, or at least a continuation correction for the stock over the near term. So purely on the back of it, I would suggest that it makes sense to exit the stock.
Okay, Sharmila, coming to you for the next one. Akshar Mathur has been holding shares of KPIT Technologies from a price of 605. He's saying he's sitting at a gains of 38%, but he can still be invested in this counter for the next 3 to 5 years. What's your view on this particular counter? Looking at the whole of the IT space, would you suggest to book some profits at this point in time or stay invested?
So I think in that sense, because this has been a space that has been a little difficult of late, and what with the kind of news that we are getting out of US from the US, where their weekly jobless data, etc., is very strong. So that sort of seems to indicate that all the measures that the Fed has been taking to sort of tame inflation is not really they've not really been as effective as they would have hoped, and now a lot of people are penciling in even a 50 bps hike in the US. So that sort of puts a dampener for IT as a space, because you had hoped that by May, June, you would sort of get clarity in terms of how order flows for all these stocks would be going ahead. But I think in this case, we've had a strong set of numbers, and this is a stock within that basket which has been doing well, which is why valuations also seem to be high. So, considering that he is making a good amount of money on his stock, I think he should stay invested. But at the same time, I think keep a close eye on what is happening in the sector and the news flow coming out of it, because you wouldn't want to sort of just lose the trade that the money that you are sitting on right now, because there's no point in being like too complacent about it, is what I'm trying to say, because this is a sector which is going through some amount of pain. But for now, I think definitely stay in this.
Okay. Sharmila, I'm going to come to you again, and this query we have is actually coming in from Soumitra, and let me just pull up the query. And this one is on Infobeams. It's a fund. They want your fundamental view on the same, and can the accumulation be started for this one? Also, they were looking to sell ITC at a stellar, what they've seen in terms of a stellar run up coming in. So, what's your view on both these stocks? Also, request you to keep your answers a bit concise because we are running short of time, and a lot of queries are coming in for you.
So in BBM, I don't really have a view. I think the other question was on ITC. ITC, I think you need to continue to hold because numbers have been good and.
Infobeams. Infobeams. Infobeams Technologies.
No, there too, I don't really have any view on. I beg your pardon, but ITC you can continue to hold.
Okay, Kunal, do you have a view on Infobeams?
Yeah, I do track, not track the stock, but I have seen the charts for Infobeam. The only concern is again is a illiquid nature of the stock. I think even if I'm not wrong, today also the stock has shown some 3,200 odd shares as a trading volume for itself. So 510 Infobeam is where the stock is trading right now. I would suggest an avoid or an exit on the stock on such kind of names as of now. I think a better prospect, if you're asking me in terms of a trading stock or a strategy, I would recommend AB Capital at current levels of 140.42.
Okay, moving on to the next question, and Sharmila, once again coming to you for this one. Answer is looking to invest into Tata Elxsi. He wants to know, is this a good time to enter in this particular counter? Because from its all-time high level, the stock is already down 41%. What's your view on this one?
So, the stock tends to be a little volatile and the numbers also weren't, after a long time actually, after many quarters, we've seen that the numbers from this company have been soft, which is why I think you've seen the kind of correction that you have on Tata Elxsi. So I think when you buy, the only caveat will be that you would probably have to stay invested with an 18-month sort of horizon. If you're okay with that, then yes, I think you can buy Tata Elxsi.
Okay, on that note, we're
back to buy now, sell now, or ET now, and let's keep it going with all your stock-related queries. And Sharmila, coming to you for the next one, because this one is a fundamental query. Actually, Akhil has been holding shares of GE Shipping, 50 shares from a price of 598 rupees. He wants the view on this particular counter for the next 3 to 6 months. What's your outlook on this one?
3 to 6 months can't really be considered long term. So I would advise him to have a 12 to 18 month sort of horizon, and from that point of view, it's a hold.
Next query is on GNFC. Tripta wants to know the current market price. Is it good to look at GNFC for the short term? And also LIC, if they're bought at 650, is it advisable to average?
Yeah, I think LIC could be a good level to average. GNFC, I would probably be I would advise to wait out for maybe another couple of days. The stock is trying to get into that breakout zone about the 555-560 mark. So I think in the last 1 week, 5 days, 5-6 days, there were 2 or 3 attempts towards that 555-560 zone, but then it's been unable to confirm a breakout. So it's always best to try and buy this when the breakout gets confirmed, because then you could be potentially looking out for at least a 5 to 7% kind of a very quick upside for the stock. So I would suggest to wait out and buy the stock only about 555 or 560 levels.
Okay, moving on, and Kunal, once again coming to you for the next one. The question is from Venugopal Reddy, and he's been holding over 100 shares of Infosys from a price of 1750. He wants to know the correct price where he can actually look to average out. So do you have any number in mind, or would that be advisable to average at this point in time?
Yeah, you can average at current levels. Now, if you're asking me for a precise support for Infosys, that comes to maybe 1450, 1460 mark, which was the previous low, I think in the month of end of December, start of January 2023. A better alternative, if you're looking at it from a trading play, it could be Tech Mahindra, a stock which I believe could potentially break out to 1300-ish kind of a target over the very near term. So it all depends on what's your time frame and what's your risk appetite. If you're not concerned too much about 50 odd rupees for Infosys, then you can start buying at current levels.
Sharmila, we have a long-term investor, Mr. Chandrasekharan from Coimbatore, who's holding 10,000 shares of Karnataka Bank at 138 rupees and South India Bank 50,000 shares at an average price of 17 rupees. What is your long-term view on both these stocks now?
One is Karnataka Bank and the other is South Indian Bank.
Yes.
The South Indian Bank I haven't really tracked too well, but their numbers seem to be good, and they seem to be at a discount to their book value. So I think you can continue to hold. I think both are hold. Even Karnataka Bank, the kind of numbers that they delivered and their valuation seem reasonable. So both are hold.
Sharmila, once again coming to you for the next one. Bala wants to know from the auto ancillary space, is steel strips, this particular company is worth a buy at current market price?
I beg your pardon, strips and wheels, right?
Yes, Steel Strip Wheels Limited, yes.
Yeah. Just give me a second.
Also tell me, did you ask Satya's query?
Well, last quarter the numbers don't seem to have been particularly good. So I think that you could possibly see some more downturn from in terms of price from here. But it's a good stock if you're looking at it from a longer term perspective. So continue to hold.
Kunal, Manish Raju is holding 100 shares of Patanjali at 1,182 rupees. How are the charts looking like for this one in the short term? Should they hold, exit, average?
See, 4 consecutive months of downtrend for Patanjali from I think 1460 mark. The stock is now at 910 levels. So ideally in this kind of a scenario, it is always better that you buy when there is a confirmation that the previous month high is taken out. Now we are just about coming at the end of the month of February. Hopefully, start of the month of March. I would expect that if Patanjali breaks past about the previous month high, which I think is around 1030-35 mark, that could be a first point where you may look to start buying. So it's absolutely okay if you miss out for the first 5% for the stock price, but then on confirmation, a big trend reversal could probably happen for Patanjali. So I would suggest a buy only on breakouts about 1035.
Okay, Sharmila, coming to you for the next one. The question is from Y. Koteshwara Rao, and he's been a long-term investor. He invested in Finolex Cable from a price of rupees 191. He's holding 215 shares. He wants to know, given the market volatility, will that be advisable to book profits at this point in time, or given the performance of the company, he should stay invested?
So Finolex Cables seems to have had a good run of late. If I'm not mistaken, they must be at their highest ever sort of prices. And he seems to have bought at reasonably good levels. Numbers also seem to be good. So I don't really see any reason for him to sell. Perhaps his concern is more because he's sitting on good amount of profit. So keep an eye on that. But otherwise, I think continue to.
The next query is from Rajesh Maheshwari. This one is on Tata Telecom, and they're holding 50 shares at 1,366 rupees as an average price. What's the outlook for the short to medium term? Should they hold, add, exit?
So I'm assuming it's Tata Communications. If the purchase price is about 1000 plus levels, then I think if that's Tata Communication, then I think you should definitely look to hold on to the stock. It's right now retesting the 200-day moving average, which is almost at 1155-70 odd levels for Tata Communications. So the last couple of months, the stock has gone through a mild retracement. It may take some time for the stock to get into a recovery phase, but purely in terms of price levels, just closer to this 200 DMA, 1150-70 mark could be a zone where you may look to accumulate further.
Okay, Kunal, coming to you for next one. Ravi from Vijayawada is looking forward to your views on Nifty 50, any levels that you'll be tracking, and he's also looking to buy put options for Nifty 50 for the March series, trying to play it very aggressive and in a risky manner. What will be your suggestion?
Well, I would not have too much of a trending kind of a view for the indices. Over the last couple of days, I've maintained that stance that even if we break below that 200-day moving average for the index for the Nifty, which we've done yesterday, I would believe that the breakdown in the trends would be very, very slow and steady, staggered for the indices. My expectation is that possibly in the second half of the month of March is where the pace on the downside could accelerate a bit if there is any kind of a global negativity which has happened. So as of now, it would make sense to probably go for shorting of call options if you are going with a bearish view, maybe a 17,800, 18,000 mark, depending on the premium which you are absolutely okay with, could be a good strategy. And hopefully in the second half of the month of March is where I would believe that buying put options could make a lot of credible sense.
Next query is for you, Sharmila, and this one is from Amarjit Singh. They have 600 shares of BSC at around 276 rupees. They have seen an increase coming in their overall buy price from that time, but in the last couple of months, we are seeing a bit of a decline. So as a long-term investor, what should they be doing? Should they book profits if they're making a profit, or continue to hold?
Well, I think continue to hold, but I think you need to definitely keep in mind that one of the reasons possibly why you're seeing a downturn is that you're seeing the way retail investors had gone up in these last couple of years, and which is why you saw that huge run up in the stock. That I think is the piece that is now missing, and you heard of late how people really want to be more in fixed income than in equity, etc. So there could be, I think, a little bit of a pressure on prices. But I think for me, it's still a hold.
Coming to you once again for the next one, Vikram Babu is looking to invest in some of the stocks for the next 3 to 5 years. The amount that he has is 5 lakh of rupees. He's seeking your advice in some of the stock picks from you at this point in time. So do you have any recommendations for him?
So I think the first thing would be definitely to do buy on an incremental basis. So possibly do your buying in 5 tranches of 1 lakh each. Then I'm assuming that you're a first-time investor. So I think the best advice would be to stick to large caps. Within the large cap, look at 3 spaces. One I think definitely is IT. One space that I like just now, we spoke about it a little while earlier, is FMCG, which would be your defensive play. And I think the third pocket that you could look at could be infra. So in infra, I think you can go with L&T. In IT, I like HCL Tech. When it comes to FMCG, to my mind, I think Dabur looks good at this price, so you could look at that. And I think 2 more stocks, we are looking at about a basket of 5 stocks. One stock could be from the banking. I like HDFC Bank at this price, so that could be another stock. And then I think, again, maybe another infra sort of that way that you could look at could be BHEL. So those could be 5 stocks that you could look at.
Okay, Kunal, the next query is coming in from Venkatesh and Vasu, and this one is on Happiest Minds. Is it a good time to invest in this stock?
Well, Happiest Minds and such kind of names, they tend to do extremely well when there is a market, I would not say euphoria, but then there is a lot of optimism in the markets. And I think that's where liquidity tends to be one of the major reasons why these stocks, they tend to get into a very strong uptrend mode. Right now we are into a phase, and possibly this phase may get a bit more prolonged for the indices, where we are into a patch of consolidation, lack of liquidity into the indices, as well as no major trend which has come back into the benchmark index. So I think in this scenario, it makes sense to avoid these stocks, not put in extra capital over here. And it's always best that when liquidity comes back and when the market momentum comes back again, is where you buy those stocks, even if it's maybe 5-10% costlier from the current market price.
Okay, Kunal, I'm going to ask you 2 questions that are being sent by D'Souza. The first one, the stock that he has is Hindustan Constructions, not a great company when it comes to fundamental, but his buying level was 20 rupees. And the other one is MRPL. He entered this counter at a price of 75 rupees. Currently at a loss in both of these counters. What should be the next move?
So HCC, I would recommend that you can hold on to the stock as of now. The volumes with the stock had shown in this last leg of up move from 12.5 rupees to almost 22 was exceptionally strong. So my sense is that possibly on this 12.5 odd mark, the stock can find a good support. MRPL on the other hand has given a confirmation of a breakdown of major support. The previous major support was around 55 mark for MRPL, and the stock is almost 10% lower than those levels. So till the time the stock is trading below 55 mark, you can exit the stock, and only above 55 levels is where you should look to stay invested.
Okay, on that note, let's get started with the rapid fire. And Sharmila, I'm going to come to you. For the first one, we have Deepa, who's holding 25 shares of Laurus Lab at 432 rupees. Can they accumulate more of Laurus Labs for the long term of 5 years? Sharmila?
I would recommend him as good.
Okay, Sharmila, Srinath is still looking to invest into Adani Group of shares. So what will be your view on Adani Group of shares after the carnage we have seen?
I wouldn't invest. Typically, I don't like stocks which are doing either upper circuits or down circuits. So for me, at this point in time, it's another one.
Kunal, James wants your view on actually entry levels for LTI Mindtree and Tata Elxsi. Is it a good time?
Well, Tata Elxsi, I would suggest a complete avoid at current levels. NT Infotech Mindtree, I think that's a stock which you should consider buying at current levels.
Okay, Sharmila Sukesh is holding 100 shares of GHCL from a price of 640 rupees, currently at a loss. What will be your advice?
I think he can.
Kunal, Praveer wants to know, Aarti Industries a buy level? Is it a good stock to look at?
Yeah, I think current zone of 535, 50 is a good range for Aarti Industries. The stock has come back to an oversold territory. Would recommend a buy.
Okay, moving on to the next question. And Kunal, Srinath is holding futures of ICICI Bank. What will be your advice on this one?
I think you can continue to hold on till the time stock is trading about 200 moving average, which is at 845 mark. You can continue to hold on.
Okay. We have the next query on the long term. Narsimha Murthy wants to know whether they can look at Avanti Feeds. How is it looking like, Sharmila?
Yes, I think you can buy that.
Okay, Kunal, Vidya is a short-term trader and holding shares of Century Textiles at a price of 840 rupees, currently at a loss, but technical view for the next 3 months.
I would suggest an avoid. Possibly the stock can get into a further correction.
Kunal, Vishal from Dubai wants to know whether it's a good time to average, what is a good price to average HAL and Tata Motors for the long term, mid to long term?
So Tata Motors below 400 mark would be a good buy, and HAL I think at current levels is a good buy. The stock seems to have ended a phase of correction.
Okay, so that's the advice coming in for all our viewers. But with this, it's time to wrap this edition of Rapid Fire. Thank you so much, Kunal and Sharmila, for joining us today on ET Now and helping all our viewers with their stock-related queries.